Perfect. So hello and welcome to this video. Here we are live today. As you may have noticed, I am not Etienne. So today we decided to hijack Etienne's channel. And well, Etienne is not here right now. He's in a plane right now, going back to Bangkok after staying some time in Canada. So he was not going to be able to do a live stream today, and we decided that we wanted to still provide some value to the community today. So I sent a message to Michael. We managed to steal Etienne's streaming keys, and you got us here trying to, provide value to the community and that. So how is it?
Yeah,
Everything going today, Michael?
good. Now, so we can talk about ETN drunk stories, or are we? No, we're gonna record. He'll probably watch it later. So, if not on a plane, so who knows? Yeah, we hijacked. I love it. It's Sunday, supposed to be a relaxed day. Maybe looking at charts. Nah, let's just hijack desire to trade. Let's do it. So great, and I'm glad we have some people coming in and definitely add some value. But let's have a little fun this morning for sure.
Perfect. So, well, really, we have a small topic, which is the title of this video. If you have any questions or you want us to, address any specific part of any topic, or you have other questions that you would like, just comment in the chat, and we will be able to answer them throughout the video. And we have a small topic, which is mostly just so that we can get started and we have something to revolve around in terms of questions. But we really want to get more feedback from your side, and to know what you are thinking, and if you are going to if you're having this type of problems, or you have thought this type of things ever, or if you're already using it in your trading, how you use it in your own trading. So I don't know if you guys want to start typing something in the chat. We can.
Yeah, go right ahead. So type in as you please. But we'll get right to the. We have a brief little talk about this. Does trade price? Does price matter? We talked about this we have our mastermind calls with Desire to Trade, our academy members, and we posed the question because someone says, "Does price really matter? Can I just click the button and then execute good risk management and it's just as good? Why am I so focused on price?" It's a fair question. We'll give you a couple takeaways for you to think about. We want to hear your thoughts as well.
Perfect. So I see that we have a good amount of people. Well, a small amount of people watching. We have 20 people watching right now. We have Seta saying good morning. I don't know why I cannot see it in here, but I can see it in the other chat. Sorry guys if it's a bit clunky. I just stole the access to the thing from Etienne, so I haven't had enough time to play with it yet. So we have a couple of technical difficulties. Well, it's because I haven't played much with this platform before.
Okay. Yeah, I'm thinking about this too. This is in the East Coast. It's Sunday morning, and for the most of the people here, it's Sunday afternoon, Sunday evening. If you're coming here on a YouTube live trading session, we're junkies. I mean, let's face it. We are. Whoever's here, or like we love her. We're welcome to the Trader Junkie, live show. It's great. The trading is a 24-hour business, but Sunday's supposed to be sort of that day where we kind of get away from the screens. But this is great. I love it. A lot of engagement. Good morning. Good morning, Pete. Jonathan, hey, good to see you. Spoke to you a few times on our chat. Great. Excellent. So Alex, if you want to just go right into the content with the one slide, we'll talk about it. And now we want to really, most importantly, we want to take this hijack session and give it to you guys. Give you guys the mic and sound off what you think about what we talk about. But anything else you have on your mind, volatility, crazy markets this week, just let us know what's on your mind.
Perfect. I'm just reading here all the chats from Pierre and Faisan. They've all, they are some of our academy members, and they are as us. They are also junkies in the sense that they are always here. We know Pierre pretty good. He's also all the time trying to talking about trading.
He's regional vice president of Junkie Central for sure. Love it. Excellent. Cool.
Perfect. So let's get started. I don't know, Mike, if you want to
If you
I
have the slide, great.
introduce it quickly and then you answer it if you want. That will be
Let's get right
probably
into it.
okay.
Yeah, it's Sunday. Let's get right into it. So basically,
Perfect.
even if you have the slide, that'd be great. But basically, we had a mastermind session a few weeks back, and we basically asked to pose the question. It was actually from one of our members who said, "Does price really matter? I mean, so focused on what's the best entry price. This, do I wait for engulfing candles, pullbacks?" Then someone goes, "Does it matter? I mean, once I'm in the trade, I can manage it, and if everything's random, I should be able to handle that." It's a fair question. I don't know if you have a slide, Alex, but if not, I'll just wing it. But so basically, that was the question posed, and we really thought about it and said, okay, well, let's look at it from a few different approaches. And again, we'll keep this light. It's Sunday, so um, we looked at it from an efficient market theory. Again, big words for a Sunday, but basically, is the market saying that everything's random? All right, we don't know. We could do all the back testing in the world, but once we push that button, new participants come in the markets. That Mark Douglas theory of just everything is random. So you see that a lot in markets, particularly like options markets, where it's more about volatility, expansion, and things like that. So efficient market theory would say price doesn't matter at all. It's once you push the button, new participants, everything is up for grabs. So the answer would probably be no. One of our the members who brought this question says, if I manage my risk really well, and hopefully they do, and they manage efficiently and within their plan, does it still matter? And the question is probably not that much if you can manage it appropriately. Okay. And then you know we thought about, what about the entry implications, say on strategy edge? It's a good question. In other words, if we enter at X, maybe on a breakout where price has already moved in your direction and now you're getting in, is it different than a pullback? Well, a lot of times back testing would kind of show that, all right, reveal that, and say, doesn't have an edge. Well, we think it does because of the next one, market context. And let's put these two together. Is if we're getting a pullback, and especially in markets which have this sort of up, flat, pullback, up, then maybe a little trend, pullback, right? Especially like equity markets, you see a lot of that. FX as well, of course, right? If we're going to get the entry on that pullback, we're kind of getting a sale at the store, just like any other asset. So, and what we did was, and we did some back testing, and did some historical models. They says the answer is, does price matter? It kind of does, actually. Right? If price has this notion of up and pause and pull, if we can get the entry on the pause or the pull back, that's extra meat off the bone. So the answer is, by all means, yes. But the last part, which really was the driver of our conversation, was market context. Yes, absolutely. One of the things a lot of us do as traders is we're so focused on charts. Where do we enter? Do we wait for the pullback to a moving average? All good. But what are we looking at with the markets? Is it a boom trending market like the US dollar? If I'm going short US dollar the past few weeks, I don't care what kind of plan I have. I don't care what kind of entry. Probably going to be in trouble, or I'm going to struggle a little bit. I'm fighting, against this really, really bull trend. So does market context have an impact? Absolutely. So price does matter in regards to market context. Are traders trapped? Are traders in trouble? Okay. Those are the things that go beyond just lines on a chart. So our general conclusion was, and we want to hear, what everyone thinks about this, is because it's, certainly topic of debate, particularly during our hijack session. Does it matter? We certainly come to the conclusion that absolutely. When it comes to strategy edge and market context text impact, it does. It gives that extra edge if we include market context in the whole scenario rather than just looking at a chart. So I certainly talked enough here, but let's throw it out there and see what everyone thinks. We've done the testing within the back testing. We realized, yeah, there is an extra edge if we can incorporate things like that. And if you have extra edge, obviously your success ratio and success model certainly changes. How's that for
Perfect.
everyone for a Sunday morning, huh?
Yeah, I think it was a great summary, or like light version of the topics that we talked a lot more in depth inside the mastermind call, which was last week, the mastermind call for academy members. And I think what really drives it, it depends on how you look at things, and that's something that we always see in trading, that you can have different contexts or different ways of looking at things, and they can be right while at the same time giving you the different, I don't know, like the opposite answer to what to do in a certain situation. And that doesn't mean that one of them is wrong or not. It means that you have to analyze it in the whole context. And that is also, if we recap quickly what Michael said, why if we think that everything is random, then yeah, nothing matters. You should just be following risk management, and if you have solid risk management, you may be able to get something. But the efficient market theory basically says that there is no benefit in doing anything. Essentially, that's like the summary of the efficient market theory is like there is no benefit on doing any effort. Don't do any effort. Just buy at any time whenever you can and hold for the next 10, 20, 50 years, and you should be fine. And that's the super quick Cliff Notes summary version of the theory. But as traders, we know that context is important, and that is when you are putting, I have my entry, I have my target and a stop loss. Now that's where the entry, like every single point matters. But if you just have one point by itself, it's kind of like irrelevant. But that's my view. So I would like to, as Michael, know
Sure.
what other people members say. I will start with one a question that we had here before you start the topic from Mota Bai, which he was asking, does price always move in a trend line? Is it true? Like does trend line work? It's kind of similar to does entry matter, but
it does 100% of the time when it does. How's that for an answer? I mean, it really, when you think about it, Mota, if price always moved in a trend line, I mean, we'd be gazillionaires. I mean, this would be so simple. The whole beauty of the markets is that it breaks certain things, it moves, it adjusts, and but once it hits a trend line, it works. It's great, and maybe has a little edge to it, but doesn't always do it. Of course not. That's what makes the market so beautiful. Good question. Nice to
perfect. Thank you. Perfect. So we have here another longer question from Zeta. So I'm going to put it here and then read it because it's very long. I guess because I can only so far see price of movement, then it will matter because movement can be random, but how much can it not be organic, considering all participants' forces ambitions? I assume that it's talking about, you can correct me if I'm wrong, Zeta. I'm just trying to paraphrase this for if people are having a bit of difficulty understanding the meaning of what Zeta wrote. I think it's mostly about you see them as a movement. You see price movement at any moment in time. The movement can be random, but as an overall, once you put it in contact with other things, then there is some type of like organization around there, considering the market participants and how they move. Then you can find some type of edges or some patterns in there, and I think that's more what Zeta is meaning. And yeah, I agree with that. I think it's a good way of looking at the markets there.
I agree. Price is really my mentor always talks about this. James Dalton. He says price is an advertising mechanism. It's true. It's kind of BS in a sense, in that like we're so focused on price, but it's just advertising. It's when it starts racing up, everybody wants it, but it's really just a tease for it to kind of pull back. Everything in life, we always want to sell. We want to sell at the store. We're buying an asset. We want to sell at the store. But how come in the markets, we say we don't want it now. We want it when the price goes higher. How can that be? It's like the one thing in our lives that we do the opposite of everything else. It's an asset like everything else. Get it a little cheaper, buy it wholesale, sell it at retail. You can make a whole career doing it. Hey, where do you think Etienne? You think he's in the airport club now, having his little mojito?
No, I think he's already in the flight. Well, I'm not talking all the time, but I was before coming here checking his stories. I think he already boarded his flight, so he posted some really nice pictures from in his Facebook. Nice. He posted some really nice pictures from I think it was Air Canada launch or one of the business launches there. So nice. I think he may be right now either on London or taken from London coming to Bangkok. at the moment. So
So
yeah,
jealous.
it's
So jealous.
nice.
Yeah.
Yeah, it's nice. Well, you were in Las Vegas just like 2 days ago, right? Or basically
I
yesterday.
just got back. I was just on a red eye. I had to, doll myself up. But yeah, it was rough. I'm getting older. I used to hit those red eyes all the time, and now I'm just, just I'm sure that the few gin and tonics at the airport club didn't help. So, but let's see what more questions we have. It's great.
Yep. We have here a question from Vivek Bhatt, which is, should we chase a trade? And before you answer that question, I just wanted to, talk to our members here in the comments. There was an answer from Liam asking, why would you chase a trade, you silly? I take it with lightheartedness, but, just in case people take it differently, just try to be nice people in the comments. That's, the comment, right, Liam, it's okay. It's not a aggressive one. It take it more as a, friendly comment. So that's okay. But I think that's this question usually we have a preset answer. But in the light of the topic that we just had, I think, I don't know if Michael, you want to answer it, and then I can play devil's advocate or to what is traditionally thought as the wrong answer.
I mean, if you're in a trending market and, let's put it, if you chased the US dollar trade 6 weeks ago, you had the home run of the year. So, there's a debatable thing. I'm a personal believer of getting extra meat off the bone, so I'm waiting for pullbacks and getting value. But in it, I'll answer. It's a really fair question, Vivek, and obviously no straight answer. But in a trending market, I'm more open to paying up a little bit, if that's a fair way of saying it. But I want as much meat off the bone, and that's just I'm probably not going to get it by chasing. It does really make risk management real difficult because now you're sort of paying up, so to speak. But as we've seen, things that go high sometimes or very often go higher. So hope that helps you a little bit with the debatable question for sure. Thank you.
Perfect. I also wanted to add to that part of traditionally what you hear most educators and most people say is that you shouldn't chase a trade. But if you think it in a certain way, any breakout strategy in which you buy in the breakout, that is, in a sense, chasing the price. Your trade setup in itself, it's telling you that you should maybe place a buy stop or a sell stop at a certain price, and then you will buy if the price breaks that level, right? So if you think of it from a different perspective, from a trader that is not trading that breakout, maybe trading pullbacks before the breakout, for that trader, taking your entry will be already chasing a trade. It will be already against their plan in a sense. But momentum traders and traders that are taking breakouts on the breakout, those in a sense are kind of chasing a trade. They are trying to get in, but they also want something to happen before, like to confirm or to have some additional information from the market that this has steam, right, to go, that it can still go. So that, in a sense, like even some of the most basic breakout setups, you could argue that they are chasing a trade when seen from a different type of trader perspective. So it's not always wrong. It's not always good. The hardest part when you are chasing a trade is how do you make sure that your risk management is good? How do you make sure that your reward to risk stays reasonable or stays good in that trade? Or in a case, for example, recently in cryptos, you have a lot of opportunities to go short before the big crash happens with several of the coins following the depegging
Yeah.
of UST. But if you are already, if you had sold yesterday, that will have been already too late. That will have been chasing the trade in a different sense. So that's, it all depends on the context on how you see it in that sense. And in my opinion, uh, you should only do it if you have a plan for how to deal with it properly.
Cool. Yeah.
I know, Michael, you are burning to say something. So
No, I want to see the other question. I love it. So
yeah,
I want to go
I know you're
rapid fire
saying.
here.
Is there any question you would like to
Just go ahead right down.
particularly tackle, or I will
Yeah, well,
go?
Francis, the joke is taking the private jet. Is it
Yeah,
clean? That's my job. I just got back from the money show in Vegas, so I haven't had a chance to clean it yet. But I know if I don't do it in the next day, he's gonna get pissed. So, yeah, I got to do that today. Uh, let's see. Liam, chasing trades equals blowing accounts. I personally would agree. I'm a big buy wholesale, sell retail. just again, understand the risk management part of it. If you can manage risk well, if you have sort of know where you're wrong, where it's below a certain area where price maybe has to revisit, when you're chasing, there's a lot of room there that can be lost, and it's real difficult in the risk management space to try and manage those. So, but know a lot of good traders who trade breakouts, and they do really well, but they manage
Yep.
their risk well. That's all it comes down to.
Exactly. I hear a question from Amogelang saying, when trading, is it important for me to pay attention to the price itself and the why? And I think that we have real different visions in that because I'm a algo trader and a price action trader. Most of my algos will trade based on a uh, indicator pattern or chart pattern, and in price action, when I do price action trading, I trade based on the market context. So in that sense, for me, if I don't look at the price, at the charts itself, which has the price or the collection of price a long time, that's what a price chart is telling you. If I don't look at that, I do not have context to what I'm going to do next, what's more likely to happen based on my setups. But we also have in the world of finance, we have the world of traditional charting and traditional analysis, and we also have these nice little things called options, in which, in some cases, the price doesn't matter at all. So, I just set my point of view from the point of view of a trader that deals with price and it's always trading the price. But I would like to, if Michael, it's okay, if you would like to share a bit more of how the price may not matter at all in some contexts, like options, in which I
Yeah,
remember you
I,
telling me last week that you were trading without even looking at the charts
I,
for the past few
I was
months, right?
actually yeah, I was actually traveling this week, and quite honestly, I had like half my screen, my laptop didn't even have a price on it. So I trade just internal stuff, and price really, again, it's an advertising mechanism. It's kind of like a little teaser sometimes. When it starts breaking out, it's just trying to probe maybe certain areas, like can it go to a higher level? No, let me just go back to my happy place. Then it goes down, probe. Oh no, let me go back to my happy place. Some see those as like, oh, I'm chasing price, but they're just little teases that you can take advantage of, and really, get some good alpha and stuff. Just again, pay attention to price and stuff. Why? By the way, Amagalang Pelo, great name. I love it. Thanks for joining. It's like, if I'm going to become an actor, I'm going to use your name as my actor name. Love it. Yeah. So pay attention to the price itself and why. I don't. I just it has such. In fact, when I see it breaking out and I look at some of the time in sales, particularly on equity side, and I see all like the small number of shares people gathering in, I kind of look at those as maybe suckers that I'm just ready to take advantage on the other side. So yeah, it is what it is. But good question. Let's see what else we have.
Perfect. So that's great. I'm going to be reading a question here from one of our members that he sent it in the Academy chat, just basically as we started this YouTube live. So it may not appear in the text, but the question is, I'm particularly interested with drawdown. I can't seem to go below 15% of maximum drawdown on my strategy, and of course, no prop firm will give you money or accept you with such a high drawdown of 15%, 15.15%. There is there anything you would recommend, or anything you would say to a trader that is struggling with reducing their maximum drawdown?
Yeah, I mean, and again, I'm not sure if members from our prop group, where we help fund traders and things through the prop programs and stuff. Um, you know, Drawdowns. First of all, I think part of it is acceptance. There will be drawdowns. Everyone goes through them, and it's just normal. It's just like the market randomness in place. But really, to reduce the drawdown is not about changing risk size and stuff. A lot of it is about understanding the market context. Understand, are you in a certain strategy that may not be fitting this current market environment? We see a lot of reversion to the mean traders of late, struggling a little bit, and everyone's going gang hu over these some of the trend strategies that we have in our group. I mean, that's great. I don't want to spoil the party, although the risk manager always seems to do that. But understand that market shift, and we can have a nice area of just like kind of flattening out, so to speak, where all of a sudden, hey, my strategy seems to be doing much better. So drawdowns, acceptance, but at the same time, understand drawdowns say 15%. Is it size? Size is always a big factor. What kind of trade size are you doing? Is it too big for your account and too big for, say, you're taking a prop challenge? But understand that, are you using the right strategy based on market context? Obviously, it's a much bigger question that we can discuss here, but our members in our academy, we really dive into that. First thing we do in trade journal audits are using the appropriate strategy for the market condition. Just something to think about.
Great, great. Some gold nuggets there from Michael in those messages. Perfect. So
I
I'm
have an audit
here.
I have to do this afternoon on one of our members, and this is my Sunday. This is why I'm a junkie. So. I'm still jet lagged too. So, um,
Perfect.
yeah,
Yeah.
what do
So
we
we
got?
have here a question from Christian. I don't know how long you want to go, Mike. So just to respect your time, since
Yeah.
as you mentioned, you are still jet lagged, so
Oh, I'm
maybe
fine.
a bit tired. If you want, we can close it down.
No,
If
no,
not,
no.
we can continue going.
No,
I'm
I
enjoying
love
a lot
Christian's
the
question. If you
questions.
want to put up
Yeah.
Christian's questions, I love it.
I will be honest. I was expecting, the hijack to be less successful. I was expecting not there to be many people, wanting to listen to, two trading junkies. If it's not the usual trading junkie, but different trading junkies in the channel. But yeah, so far I'm really happy that the people are still piling with questions and they are
Yeah.
still
Oh, keep it
being
going.
great. Perfect.
Christian had a great question. Is how do I gauge sentiment and volume
Yep.
before price is printed? Personally, and I'm gonna throw this a little outside the box. This stuff, but I live on this stuff. Market profile. I mean, if you want to learn a little bit about the concept of market profile and volume profile, just Google those things and get a little more familiar with it. Again, these are some of the things that are internals beyond the charts or behind the charts that you don't really see too much. I think it's career changing for me, and something that, again, it's an advanced topic, but something you may want to think about exploring. So powerful.
Perfect. Yeah, and that's one of the topics that it's not that commonly seen in Forex trading, for example, which is what most of you guys may be
Mm,
more used to see or talk about. But it's one concept that I think it's pretty core for many futures traders. Volume profile, market profile is one of those concepts that, and maybe as Forex traders, we could apply from other markets a bit more, that give a different
yeah.
view of how markets play and a different vision of how they work.
Mm.
Here we have a question from Liam. So I'm going to put it here. He said he already knows the answer. So the question is, what's a reasonable percent show, percent gain amount of per year, amount of profit or performance in an account? And we also had the
Uh,
same question in a similar ways from different
awesome.
members from
I want to hear
SSC.
your answer, Liam. I want to hear it. I love it. Actually, my answer is how much risk you want to put on. I mean, whether it's personal or like on my managed side, they're very happy with like 2-3% a month tops, and then I'll have other ones who are like, I want to make 10% a month. Go ahead. Okay, fine. Fine. Your risk of ruin, the chance of blowing your account is about 10 times greater within, like, say, an 8% a month target. But yeah, we can do that. So again, it's all relative to risk management. Also, what is your market? What's your sort of risk profile personally? Like, are you willing to put on some risk? Are you willing to, you know, throw in a big, large size on, say, some of the coins this past week? Sure, you have a good chance. You were probably up 18% in 1 week on some of the coins this week if you're willing to take that chance. It's all relative to risk, though. Thanks, Liam. Good question.
Yep. Yeah, and I would actually like Liam to, since you said you already know the
Yeah.
answer, can you type it there in the chat so we can also? Oh, here, type it. He put 3 to 5%. It's a reasonable amount per month, and it is reasonable, and that's actually achievable. As Michael mentioned, the main thing is about risk. If you are able to manage risk, then that's achievable. But in the same way, you could have a reasonable, achievable 10% a month if you double the risk. You may have a lot more chance in that point that you may have some type of catastrophic drawdowns in the future, but that you could do that for a certain amount of months. And as Michael mentioned, there are some people that are happy with a 5% per year profit as long as you keep the equity curve pretty small moves, pretty steady, and the drawdown super small. Some of them are happy. Think of more like fixed income type of things. They get a really small amount of profit a year, sometimes less than 3%, but they basically have a really small risk of volatility in their account value, right? At any point in time they open their account value, you have a really small volatility risk. Conversely, if you put all your money into cryptos and you leverage in your trades, every 5 seconds you open your account and you see the value, your account value may be widely fluctuating between plus 20%, minus 15%, minus 50% loss, and things like that. So, what it's realistic also has to do a lot with how much pain you can take, how much of a masochist you are in a certain sense as a trader, how much you can deal with before you stop following your plan and you start making mistakes that are outside of that. Perfect.
Do you mind if we can go to Vicky, if that's okay?
Oh,
no, we'll go to Vicky next. Actually, great. Hold on there, Vicky. We're getting to you. Is it better to follow a fixed risk reward like 1.5 or keep it trailing until price takes out? It's interesting. SCH. This is actually our Academy Mastermind topic of the month last month. Is it better to take fixed versus like a rolling? Basically, and again, it's the announcement that we've done and some of the history is that it's kind of 50-50. In a trending market, it's generally more advantageous to keep trailing. I've been doing a lot of trailing the past month or two, and I'm not really a trailer. I'm a fixed target, take profits, reload. But there's also a lot of confirmation bias and things that come into play there too. So trending markets, you may want to lean towards it. I'm a personal thing where I throw out the math and say on Fridays, I'm going to go for it. I'm going to trail and I'm going to if I'm having a good week, I want to lock in potentially having a phenomenal week, particularly on the managed side. So, I want to window dress a little bit. So, little things, little nuances like that play a role. But mathematically, there doesn't seem to be a major statistical edge, except in trending markets, trailing seems to be doing a little better. That just makes sense, not just from a math standpoint, from whatever. Yeah. So, and actually, it's what do you think about entering, Alex?
Yep.
Vicky's. Yeah. So, what do you think about entering late in the trade using the original stop, taking profit, and risk percentage? So, would the edge be the same or different? The answer, well, ceteris paribus. I mean, everything else aside, I'm just basing on your question is the risk actually would be greater because you're not taking if your risk is your stop is going to be in the same area, but you're entering late in a trade. Okay, um, but just mathematically, your risk is greater. If you are adjusting your stop in relation to your trade, so say it's like whatever X amount of points or pips or whatever, and you're adjusting it mathematically it's the same, but where is that stop there? Are you sort of putting yourself like a sitting duck that's just gonna like maybe the randomness is gonna stop you out, or are you putting it behind sort of a wall that's protecting you, such as a support resistance or however whatever your plan dictates. So what we see a lot is when people sort of chase and they just keep their risk reward 1-to-1, mathematically it's the same, but again, that stop is like a sitting duck. You're in an area where price can normally just navigate to and kind of stop you out. I'm a big believer, and we're a big believer in our group is if you can keep that stop sort of behind a wall. In other words, tell the market, hey, you want to stop me out? Go right ahead. You're going to have to go through this wall. And then if it stops you out, it's just okay. I accept that. But when you put your stop too tight like that, or in an area like that, it gets a little hairy. And we've seen the profit factors, the win loss ratios go down when people do that. So good question though. Thanks, Vicky, and welcome. Good morning wherever you're from. Good afternoon.
Thank you. I'm sorry for not seeing it before. For some reason, it's not appearing in my stream thingy, so I had to go and search it in
Alex,
the
put the Bloody Mary
official
down.
YouTube.
Okay, put the Bloody Mary down, and let's focus on the questions. I love it.
I can't seem to find it. I don't know why it doesn't work. It should be in our panel here, but it's not. So, yeah. Sorry if I don't see any question specifically. It may be because it's not showing here. Maybe somewhere else.
Yeah, no,
So
just
sorry for.
we have a. No,
Yeah,
that's
if we
okay.
miss any questions, sorry for that. It's we have a lot more questions that
Oh,
we
I could see him.
expected
So
originally.
Robert asked actually isn't rising prices evidence of momentum and the right time to jump in? Um, It's actually a two-part question. Is it evidence of momentum? Yes, absolutely. Is it the right price to jump in is a separate question. Now we have to look at, again, the whole risk reward thing. Think about it this way too, and is I'm there's different market phases of, and I don't want to get too crazy about it, but I want to be sort of an innovator. I want to be on the early stages of the bandwagon, and I'm willing to take that chance. When price is moving in a certain direction, buyers have already stepped in. All right. And those buyers ultimately have to sell. So there's more like heavier loaded buyers who are eventually going to have to sell. That's going to put pressure on me if I enter at that point. I kind of want to be in relatively early, take a chance, and have those buyers push me to the promised land. It's a lot of it is math. A lot of it is purely it's a risk based type approach, but a lot of it is just sort of human behavior theory. I mean, these are the people who are going to have to sell to get out and put pressure on price. But so I don't want to be in front of that train. I'd rather join the bandwagon and let everybody hop along and push me to my target. A lot of times when I'm taking target one, um, Alex, I think your thing's on, your keyboard's on,
Sorry.
but if they're pushing me to target one, I kind of want to hit my target when those guys are getting in. So that's just again sort of a risk-based approach to things. But very good question. Again, when you're in a trending market, Robert, I mean, you can get in really late and still do really well. So again, U.S. dollar is a great example. Anything U.S. dollar pair was you're hitting home runs the past month or two. Yeah,
True.
yeah,
Perfect. We have here another question from
love it.
Shut Up Gaming. Shut Up Gaming
Shoot up,
asking, how do you decide a market?
love it. A quick, if you mind, I'll take this one. If I look at two things. One, does it meet my plan components? Does it meet my strategy components? That's real simple. Am I, we're project managers here, right? We're executing a plan. Don't worry about the trading thing. We're executing a plan. Does that trade setup give me an opportunity to execute my plan effectively? Simple as that. The other thing I'll add too is, and one of the components of my trading plan is the volatility. Is volatility or price movement, you can use average true range or whatever you want to use, but is it beyond too much or too little to meet my sort of plan requirements? So those are the kind of filters that I look at when I do it. The other thing too is, how do you decide to trade or not? Well, you know if volatility is really high, or say the average true range is like off the charts, I decide to trade maybe my trend based strategy. Okay, so I suggest everyone have a few strategies to where you can do focus on in choppy markets and in trending markets, and at least have one strategy for each, because that will kind of cover most of the range. So there's very few markets that really, if you have at least a few of those strategies in your hand that you can execute well in your plan, you should be able to be exposed to most markets. Shouldn't be a problem. Again, look at these price movements too as opportunity. I see a lot of people getting a little scared of all the crazy markets, and you know, Federal Reserve is out of control. These are great. I mean, I live for these trending markets, so I'm good. Doesn't mean I'm loading the boat, keeping risks and size in check, but take advantage of these things. It's a beautiful thing. I'm a little exhausted the past few months, but you know, especially on the West Coast, and this past week, I was waking up at like 2 in the morning to catch the pre-market and stuff. It's just nuts, but I live for this stuff. When the markets are dead and choppy, it's kind of boring and doesn't provide as much opportunity usually.
And you can also see the same type of concept in beside specific markets. So inside, for example, stocks, you have people like the S&P Capital, people who trade stocks who are always talking about the stocks in play. They're not trading any stock; they are trading only specific stocks that have certain movement. So I think it's the same concept that you just mentioned can be applied to the macro version. What asset you want to trade, all the way to the micro version, to what specific asset, what specific pair, for example, what specific stock, what specific future you want to trade. And I think it's a pretty powerful concept in that
Yeah, and
sense.
have a nice blend too. I mean, you can, I'm struggling. I was short on Japanese yen, and I was kind of struggling with that. But then I was short Tesla, and it was just like Although, boy, you lose a lot of hair trading Tesla, but it was short Tesla, and I just closed my position the other day, and let's see if I'm ready to reload actually on that short, but we'll see what happens. But yeah, that's that combination that makes it all interesting.
Yep, perfect. I think we are going to be taking a few more questions, and then we're going to be closing it out. We have a lot of questions, so I think if you continue answering questions, we could stay here for your whole
Yeah.
day, Mike.
And by the
In
way, Alex,
here.
if we can put it up, I mean, if we don't answer your question, just send it to us, an email to us, Desire to Trade, and I promise you, I'll get back to you. I promise that.
Yeah,
So
if you have any questions or ideas for future videos that we can do, well, Etienne can do, or we can help Etienne doing for the channel, you can post them, you can send us an email, or you can use it later here at the chat once the video is published. You can, in the comment of the video, you can add the questions there, and Etienne tries to look at them all the time. So if you have any good ideas, we can take them later and make them into more developed videos or make another YouTube
yeah.
live like this.
But in these questions, if we don't get to it, just support at Desire to Trade, and just
Yep.
copy your question, and I'll answer it. Actually, I'll probably answer it today because I'm just going to be doing trader audits all day. So awesome. Yeah. Which
Perfect.
a few more questions, Alex. Yeah.
So yeah, I would like to address this question from STH. Are you more discretionary or systematic trader? Since we don't have it in this time, I will take it as it's a question for both of us. So uh, and which one is more sustainable? For me, I am 99% systematic in the sense that I trade with algos 99% of the times. I only trade a bit with discretionary, and that's basically like one trade per week when I trade on a weekly basis. But most of the times it's not. Like my most, I just trade sometimes randomly. One day I decide, okay, I will trade in my play portfolio, and I play a couple of trades. And for me, it's much more suitable to do algorithmic trading. But I also know stories of discretionary traders that have been trading for a long, long time. So it is there are different worlds, and you can do it in both sides. But what fits me best is the systematic style. What about you, Mike?
Yeah. I mean, it's systematic. I consider myself a systematic trader as well. A lot of it is not algorithmic though. It's systematic in the sense I'm executing a plan, just like an algo technically would. So I consider myself systematic as well. Discretionary is great. What we found, is particularly in my coaching, is that I coach discretionary traders as well, and there is an experience component that really has to come into play. You have to know the nuances of markets, have to know the nuances of your particular market too. So, and I have definitely there's some success. I have successful traders who are quote discretionary, but really they're discretionary. They're just executing a pre-done plan. So it's not like, I think the market's gonna go up today. I'll go long. It's all pre-designed. So when they say discretionary, they're really kind of systematic, just doing it manually. And that's everyone from individual traders to some of the hedge guys as well.
Yeah,
Thank
that's actually true. Many discretionary traders, they are discretionary in the sense of their filters are more discretionary, but the process itself, it is a systematic process. But you may have like discretionary small parts that it will be really impossible for them to like explain them in a black and white type of
yeah.
filter stuff.
Yep.
And that's
Uh,
where the discretionary really comes in. But most of it, as Michael mentioned, it tends to be it's a well established, well developed, and rehearsed process. It's not I got up today. Oh, here's a chart. Oh, nice price. Click buy. It's not like just you're just doing random stuff discretionarily. As in you decide to walk the dog today. You don't decide to walk the dog the next day. It's not like that type of discretionary. It's just discretionary in which uh, the fine filters have some human discretion in them, but the whole process itself, it's still pretty much
yeah.
a checklist almost, or a procedure, manuals of rules of how to do the things for
Yeah.
your strategy. Yeah, that's true.
I always cringe in our Slack. We have a Slack chat group in our academies, and we have 24 access. We're always answering questions and getting feels. And sometimes when I hear the word, like, I have little buzzwords that kind of get me a little nervous as a coach. When I say I think, like I think they're gonna the Federal Reserve is gonna go 50 basis points. When I hear the word think, I get nervous because like guys, stop thinking. Like don't think, just execute the plan. Um, and again, when you have experienced people and stuff, I'll give them a little room, but there's your discretionary lesson. Don't think. Okay. Us traders, we're not not the super intelligent neuroscience. We're just we're just guys executing a plan. Cool.
Perfect.
Yeah, a couple
I
more.
think this will be the
right?
last serious question that we have for today, which is, does divergences play a role in your eyes when entering on pullbacks? If yes, how?
Good question. I have to think about that. I mean, it does, but I don't look at sort of, like MACD divergences or things like that. I'm not a big chart like indicator kind of person. But what I do look at is, say, the volume elements of things. And again, I know in FX it's a little difficult, but when you get new highs and volume starting to trend, or this last burst on like these like been trending for a while, and then this last burst, big huge volume, especially on small size, I kind of look at that as like newbies entering. That's the time where like I'm that lion in the tundra waiting for the kill. I'm looking for the weak wildebeest. That's that. So to me, that's like a divergence like that. But MACD stuff and things, and I have traders who do really well with that on internals. Charting type divergences. But it plays a role. It's not a huge one, but again, I'm looking more for like stuff outside the chart. And now that I confused the hell out of you, that's I'm sure you're thrilled about that. I love it. You're on mute, Alex, if you can. So let's say. So now I hijacked Alex because I can't hear his voice. It's great.
That's true. Thank you. Yeah. So
Actually, we're enjoying that. Actually, go right ahead, Alex.
Yeah. So Zeta also asked the same question for me, basically, which is, do I use divergences for my personal algos? And in my personal algos and in Algo Nation, I don't have any divergences, or I don't use any divergences, mostly because they are a discretionary type of thing that you define, what or how really looks like a good enough divergence. But, like what angle of the candles versus what angle of the indicator and that. So I don't use any divergences like that, but I use relative values of things. So I have the volatility filter for relative volatility and other type of filters such as relative market noise, relative volatility, and the trend direction. So I use other confluence factors that help basically filter or narrow out the market conditions to what that strategy or that system works the best out with. And most of the times, for most strategies, the most important filters have to do with support and resistance levels and with just a trend. Just trade with a trend 90% of the time. That's the best answer. What is the big picture trend? And then just in the smaller time frame, you do that and you trade that. And I'm also right now programming a strategy for a trader who has a pretty good strategy, and it's based on that. And it's also big picture, filter, support instances, and then go into the small picture, trade with a trend, and enter just those setups. And it's pretty much the same. And the concept itself, it works pretty well. And there are many different ways of applying it to your strategies, manual or otherwise. So you can trade with divergences.
By all means, I love it, and it's a great thing. Just find your niche, find your specialty. We had John Carisco on about a month ago on our podcast, and his one of his biggest filters is divergence in itself, and I really like his work. And mostly on the equity side and futures, but check that one out. It was about a month ago. John Carisco was a really cool podcast guest, so check that one out.
Yeah. And the main thing, it's what Michael mentioned before the John Carisco part, which is you just need to find your niche. You need to find what works best. That works in trading, that works in businesses, also in normal business and in trading. If you find your niche, you're going to be able to get more profitable, and you're going to be able to do the things better, because not all the type of trading will fit your style. Maybe the type of style of trading that Michael does doesn't fit your style at all. the type of trading that I do, maybe for Michael will be hard to do because he, likes to have some control in there. He has like some hands-on things versus, just letting the thing and not doing anything feels a bit boring for him, right? Like for Michael, things like that. It's the same in other parts of trading, and it's also if you go to business and you got to find the rich people in small towns, you will find that they are usually people that have some type of boring business, like cleaning sewage, like maybe a car dealership or something like that. Some business that doesn't sound sexy, some business that is relatively boring, but that they have a niche and they have the market for it. And because no one else is doing it, because not a sexy business, and it's something that people need to be done, they're going to probably be the most rich people around in the area, just because they are doing a boring business. And you can translate that to the markets, into the niches in trading. If you do your niche, you're going to have less competition that is going to be trying to get the same niche. If you go to try to trade exactly what everyone else is trading, you're going to have a lot more people competing with you because, well, guess what? That's exactly what everyone is talking about. That's exactly what everyone is listening about or learning about. That's the first thing they're going to all do. So you have the experienced people that are trying to take advantage from that people, and then the new people, all of them in the same pool. And if you got to a niche, then you can try to find your own edge and develop your own edge in a way that it fits you better and that you're going to be able to sustain it for a longer term.
Good. Boring is profitable. Yep, absolutely. Yeah.
Yeah, perfect. And probably the most important question for you, Mike, here.
Great question, and I'm going to give you the answer. This. I love this, Francis. All right. I was in Vegas for a conference, the Money Show. Actually, it really was. I worked with a lot of the guests that we have on our show and our podcasts were there, and just working the floor and things like that. But I ate a little too much in Vegas, so I had a little too much fun. So I have to get back to my normal. So it's going to be probably like a bok choy with a little. It's very, very healthy, low carb stuff. I have certain goals that I've set on myself this year, and actually, I've dropped about 20 some pounds now, but I want to do a little more. And if I don't reach certain goals, there's certain conferences that I want to go later in the year, and I will not be able to go on them because of my own personal challenge. Um, so I got to get back on a little rough, little too much fun this week regarding those steak tartars at the Bellagio were a little too much. So, but I digress, and thank you very much. But I'm going to be very boring. Profit, boring trading, and boring dinner for today.
But Mike, you didn't tell us what it is. You just told us it's boring, but you didn't tell us.
Yeah, I don't even know. When I saw it, I didn't even think about it actually. Probably something like I just got myself a new grill, so probably like a grilled chicken breast with like some veggie on the side, kind of thing. I got to be good. I said it yesterday too, and I said, "All right, Mike, got to get back on track." Just I don't know. I entertained a lot of traders in Vegas, and by the way, any traders who come to those expos and things, just let me know ahead of time, and I'd be happy to meet with you and stuff. We had a nice little meetup at one of the casino lounges. It was just great, just traders talking and BSing about stuff, and but some of the food could get a little crazy.
Perfect. Francis is saying that you don't have to worry about it. He can take your place in the next conference. So
Yeah,
you don't have to worry about it. You can eat whatever you want tonight.
that's what got me in trouble in the first place, Francis. But thank you, thank you. Awesome.
Perfect.
So I want to
So
make sure everyone is support at desire to trade, right? .com. Is that okay?
yeah,
Send your
support that
questions.
is hard to train. Let me just put that. Give me a second. You can talk, Mike. Meanwhile,
Absolutely. Yep. Absolutely. Next February. There's actually one in the Money Show is in Orlando in late October. There's one. I'll be there for that. And then there's one in Toronto in September. Not sure about that. I gotta check with gotta see what the regulations are as far as going into Canada. But again, for those in the Americas, those are some pretty cool stuff. Great way to meet traders. Great way to just talk trading. There's a lot of sidebars and side missions where you're in the floor conference floor, but then you just find yourself a table and you just like start chatting. And quite honestly, I've had like some one-on-one sessions with people I don't even know and some of coaching sessions and just that's okay. I'm an open book when I'm there. So
Perfect. So yeah, I just type it there so people can see it in the in the actual stream. You can say if you have any questions after the live stream, you can, as always, put them in the comment box below with the video. If this video is already you're watching the replay, but you can also send them to support Desire to Trade, and
awesome.
we will either add it in future to a future video idea, or if you send them today, probably Michael will be answering them to you via email. There, perfect. So thank you everyone for coming. Thank you for this lovely Sunday night for me, Sunday morning for Michael, chat basically that we have today. And yeah, well, I don't know how Etienne finishes these things, Michael.
I'll just Etienne's not here, so I'll just swing. Guys, this week can be a little volatile. The volatility is kind of out of control, and I don't expect it to be going away. But what do I know? So just keep size in check. Risk management first. Don't worry about the profits. Focus on the risk. But watch your size. If you have to go lower on size, it's okay. The markets will be there for the next years. We want to make sure you're there. Okay. And again, any questions about that, just fire me a bill on support at, and we can see if we can help you out.
Perfect. Thanks, Mike. And well, for everyone, as you know, this is Etienne's channel, so Etienne will be dropping some new videos once
It's
he's
not his
back in
channel
Bangkok.
anymore, boys.
Yeah.
I'm changing the password. I love it.
Yeah, it's going to change tomorrow to Michael's Desire to Trade channel then.
If I'm still around. He may cut me off.
Well,
awesome.
probably when Etienne comes back, arrives to Bangkok, he is going to cut access to us. So he's probably going to be releasing some new videos next week. And if you guys want to watch the videos that Etienne has here, if you maybe want us to hijack the channel more often, you can let us know, and we will try to knock out Etienne or send him somewhere for a couple of days so that we can take over the channel again if you like that, guys. Yeah, so give us feedback on these type of things, and subscribe to the channel to watch more videos from us and also from Etienne to get a lot of trading value, and also to see some parts of the lifestyle that Etienne, all the videos that Etienne has has prepared for us in the future. Perfect. So thank you everyone for coming. Thank you for being a really good group of people here for chatting today, this lovely Saturday night, Sunday night. Yeah, so everyone have a great week, and we'll see you.
Enjoy your Sunday. Thanks, everyone.